right. So today we'll be continuing our discussion. This is day 6. We will be discussing more on market structure. But before then, I want to address a question somebody dropped. I think Mr. Dari Joseph dropped on WhatsApp. He was asking that he was getting some unfamiliar lot sizes, and that was because you altered your contract size. So the contract size should remain 100,000 at every point in time. As you move on in your trading journey, you might get to points where you can alter your contract size. But for now, it remains 100,000. This contract size means that one standard lot covers for 100K. That's what this means. So if you remember when you were taught lot sizes, before the advent of computers and every other thing that we have now, if you want to trade in the financial markets, you want to trade currencies, you must have at least $100,000. That is when you'll be able to trade, because then you can trade one lot, right? Then later on, it dropped lower. They say you can trade $10,000, and that is one mini lot, 0.1 lot size. Then you can trade $1,000, which is 0.01. That is the smallest lot size. So if you are trading a 0.01 on Euro USD, you are actually controlling a Euro USD of the value of $1,000. That's what you are doing, right? But the reason why you and I can put $200 in an account and then trade with it is because our brokers gives us what they call leverage. Of course, the word leverage came from the root word lever. And those of you that are science students, you know what a lever does, right? So when you have a lever, it magnifies weight or force. So if you want to carry something heavy, it's easier to put the heavy thing here and now push this one down, and this will go up, right? So our brokers give us leverage. So let's say you open an account with a broker and the leverage is 1:200. You see, your broker is giving you, for every $1, your broker is giving you 199, making you trade as if you have a 200. So if you are trading with a 200,000 naira, $200, your broker will make you trade as if you have 40,000, as if you have $40,000. Your broker will make you trade as if you have $40,000. And remember, if you have, you just have only 200, right? But they're making you trade as if what you put in your account is $40,000. That is why it's relatively easier to make money trading Forex. Why? Because you have leverage. You are trading more than you actually own, right? It's like you're a distributor of a particular company and they say, bring 100,000 and we'll give you goods worth 400,000. And when you finish selling, bring back our money, right? What they just gave you is leverage, right? Spontaneous financing, leverage. So, however, you have to know at the back of your mind that because you have a leverage of 200, doesn't mean you can lose this 40,000. You can only lose your own 200. Once you enter a trade and you are losing and you get to $197, your broker will forcefully close the trade for you. You absorb the loss, and they go home with their remaining money. If volatility happens very, very fast, so fast that the broker system cannot cut off the trade, you can even be owing your broker. Let's say they finally cut it at 250 negative. You are owing your broker $50. It happens. Seldom happens, but it does happen. So the reason why you're able to trade, so if you notice some people having $200 and you can enter a trade of 0.05. With $200, you shouldn't even be able to enter a trade of 0.01 because you don't have the minimum. What is making you to be able to enter a trade of 0.05 or even 0.01 is because your broker has given you a leverage, has magnified your money for you, right? So when we trade currencies, the maximum, what we call the standard lot is one standard lot, and it's equivalent to $100,000. So when we go to my FX book, this is $100,000, and you leave it there. This shows that you are trading a contract size of your contract size based on your broker is one standard lot, right? Again, might be too high for your class, but I'm just saying this so that you don't alter this at all. Leave it as it is. You can change the currency of your account. You can change the currency pair. This currency of account means it's your account denominated in dollars, pounds, euro, whatever. You can change your account size. You can change the risk to reward ratio you want to use. You can change the stop loss, but don't change this, right? So I think I've addressed that question. Let's move on. So last week, we had the opportunity of trying to make sense out of all of these things we can see on our screen, right? I'm very, very sure the first day, I need two people to talk to me. The very first day you saw this thing, this green and red, what came to your mind? If you're in a quiet place, you can unmute yourself. If you are not, you can just type. The very first day you saw this thing, what came to your mind? Anybody?
Good evening, all.
Good evening.
The first that I saw it, what came to my mind was like I'll never understand it.
Thank you very much. It was like you can never understand it. It's like, what is this? It's like chicken using biro or your small child using biro and just scribbling. Yeah, somebody say, what kind of nonsense is this? Oh my. A friend of mine, will I call her a friend or an acquaintance of mine? We started learning how to trade from the same organization. So she has been hearing over the radio many years back. People were talking about Forex and they were making it look like it was very easy. You just click a button and boom, you're in the Bahamas swimming and eating shark and living with Bill Gates, right? So she subscribed, and then the subscription fee was like 100,000 naira. So she subscribed to learn, and that 100,000 is just for a month. 100,000 naira for a month. So you guys, you can see what Rich Vision is doing for you guys. Is like actually giving back to the society. We paid 100,000 first month, and is it 80 something thousand every other month? So the first day she came into the hall and she saw something like this. In fact, this was not what she saw. She saw something that looks like this. She saw something that looks like this. When she saw it, she just turned back, went to Mr. Shola and said, Mr. Shola, please, can you just return back my money? I don't think I am not interested again. Just return my money, let me be going home. You know, and they had to persuade her and console her and everything. But she turned out to be one of the top traders in that organization, growing a $200 account to well over $10,000, right? One of the few people who initially went to the bank to withdraw money from the domiciliary account. I still have one of her videos where she just went for the first time to collect money from the bank, and she was singing in the car and shouting like she has seen an angel, right? But this was the same person who saw all of this and said, oh boy, just give me back my registration money. I know they do it again, me shemo. Right? So our job this week is to demystify it. So already we've done something. You guys, we squeeze this thing in, and you already now know that what you are seeing here is a downtrend. I mean, you can now identify a downtrend. Kudos to you guys, right? You can identify it now. So what we're going to do today is we're going to dig a little bit deeper. We've been able to identify them as clusters. We're going to go now and talk about each of these things we see here. Of course, by now you should know that these things are called candles or candlesticks. We will now go and break down each of these candlesticks and what they mean. Now, if you go to Google and type how many people are involved, how many people trade Forex in a day, well, Google might not give you the exact answer, but how many Forex? No, how many people? How many people was out? Oh, no, how many? How many? Sorry, people trade Forex, right? You will see number like 9.6 million people, 10 million people. See in North America, this, in Middle East, this. Of course, this one did not even contain. Forex is decentralized, right? So you can only talk about numbers. These are countries. I'm not sure we have a country like Nigeria there. So let's round it up to, like, in fact, Africa, they just said about 1.3 million. Even Nigeria alone, we should be getting over 1.3 million already now. So there are over 10 million people trading this market, and permit me to say 10 million entities. You and I are individual entities. We have countries, we have institutions, we have banks, we have hedge funds, right? We have fund managers, wealth managers, different kind of speculators, hedgers, arbitrage traders. There are so many people, brokers are there, so many people involved in trading, right? So many. Now, I'm not a football fan, but I love using this illustration. I'll use this in this class. Right. There's a club. Their glory days were in the past, but their fans like making noise too much. They call them the Gunners. Right? As far as I'm concerned now, the Nas have been removed. It just remain only Gun. In fact, the Gun can be spelled as this. But let's leave them alone. So we have Arsenal and we have Chelsea. Right? On a normal day, if the ref is not supporting anybody and VAR is not supporting anybody, you have 11 versus 11. Ladies and gentlemen, I'm giving you this information I'm giving you, it took me 3 years for it to sink into my head. And this was the turning point for me. This thing I'm saying here is the turning point. Even though I'm saying the turning point for me, many of you may not understand it. You wonder, like the prodigal son, you do so many things, but you come back and discover that this is the turning point too. This will be the turning point for you too. But I'll say it here in this video. right? So there are 11 players in Arsenal and 11 players in Chelsea. In total, there are 22 players, just 22 individuals. But how many of us here can boldly stake your life to say when Arsenal and Chelsea meet, Arsenal will win or Chelsea will win by this margin, and this player will be the first person to score, and he will use his left leg to score? How many of us here can do that? Let me not even staking your life. That may be too much. Just take your 1 month salary. Can any of us here do that? If you know you can do that, just put a 2 in the chat box. You can tell us specifically that in the next football match between Arsenal and Chelsea, this team is going to win. They will score at this minute, and this player is going to be one to score. He will use his chest to chest the ball into the goal. The answer is nobody. Practically nobody. Now, if nobody, let me write it so that it sinks in very well. Nobody. If nobody can tell you what 22 players will do in a football match, 22 players will do in a football match, can anybody tell you what 10 million people will do? Can anybody tell us what 10 million people will do? If you cannot correctly and with precision tell us what 22 players will end up doing, what gives us the impression that we can determine what 10 million, over 10 million people will do? Nobody. Nobody. So in this space that we are, we all try to forecast. If I know for sure that price is going to move up for 2 pips, I would sell my house, sell my car, sell my village, take a loan, and win that 2 pips, use the largest lot size possible, 10,000 lot size, make money, and just disappear from Nigeria, right? But I don't know. I don't know. I'm not sure of what it's going to do next. And like I told you guys, this is the tipping point for me. If I'm not sure of what next will happen, then I need to be careful how I trade. I have to ensure that I share my risk. It means every trade carries risk. And if I'm not sure of what next is going to happen, I don't want to over risk any single trade, right? I don't want to risk too much on every single trade. So what is the difference between those of us who forecast and gamblers? What is the difference? So why is Forex trading not gambling? It's because in gambling, there's something that is called the edge. There is a term called the edge. When you gamble, you are destined to lose. Why? The edge always supports the house. So in gambling parlance, they will say the house will always win. So if you are rolling something and there is red, blue, green, something like that, it has been programmed in such a way that the house will win 51% of the time, and other people can win 49% of the time. So the house has a 2% advantage, and that's all you need to win. That's why casinos keep making money. That's why Baba Jebu will keep making money. That's why Niger Bet will keep making money, and all the other betting houses. They will never pay more than they accept. They will never pay. They will always, always have something left for themselves, right? So when you are a gambler, you are destined to lose eventually. Why? Because the edge is not in your favor. The edge is the favor of the house, which is the owner of the casino. So the owner of the casino doesn't care when people roll a dice and they win and they are shouting, hey, I just won something. Even if 10 people win back to back, the owner of the casino knows that by the time 100 people would have played, he would have won 51 times. He doesn't care if 10 people win back to back. He knows that he would have won 51 times out of 100. So he's relaxed. He will even give you refreshment to play, right? It has been rigged. Now, in trading, in currencies, it is not rigged per se, because who is going to rig it, right? So it is you and I that can plan the markets or our moves such that the edge will now be in our own favor. We'll plan the edge to be in our favor. That is the difference between gambling and trading. Gambling is like football. When you play football, you look at your opponents, you see their strengths and their weaknesses, you see the opportunities and the threats that they have, and you draw your own game plan, arrange your formation, 4-2-2, whatever you want to do, change your players, write your game plan, and you go with the aim of twisting, altering the game to be in your favor. You alter it to be in your favor, right? And that's exactly what we do when we trade the financial markets or any financial instrument for that matter. We try to alter the edge to be in our favor. Now, some of you here are seated in UK, some in Nigeria, some in other parts of Africa. Our time zones might even be different. Nigeria is GMT +1, Ghana is GMT. The US may be something else. But we have something in common. All the things we do with regard to trade, I'm going to call up a pair now. This is a pair of AUD USD, Australian dollar versus the United States dollar. All the collective behavior, the collective action of everyone involved in Australian dollar versus United States dollar has been compressed into this candle we are seeing here. So if I bring my cursor to this level, to this candle, look at the time under my screen. You can see that that is the 9th of March, 2021, and that is a 4 a.m. candle. That's the 4 a.m. candle. This candle tells us the summary of the attitude or actions of everyone involved in trading AUD/USD, both buyers and sellers. Everyone involved trading AUD/USD at that time, this candlestick tells us. So since I'm unable to know the name of the individuals involved in trading AUD/USD, I'm incapable of reading their mind to know whether they want to buy or sell. I mean, it's just beyond me. But if I can develop a way of reading their action after it has happened, may I be able to know what action they may take next, having seen the action they took before? Which is why we're discussing what we're discussing today. We've been able to put all of them together and say, okay, over a period of time, the majority seems to be buying AUD/USD. And I don't want to go against the majority per se. At a point in time, they sold temporarily. And after a while, they resumed to buy. And now, oh boy, it looks like they are planning to sell. You see that? This is collective, the collective attitude of everybody, actions of everybody. Now, but this collective action can also be broken down into smaller cells, and we want to discuss the smaller cells. These smaller cells are called candlesticks. Traditionally, it should look something like this, because it's actually a graph. This thing is actually a graph. It's a graph of time. Look at the time underneath, right? Everything here is time against price, and this is price to the right of my screen. So here we have price. Here we have time. So it's a graph of price against time. And if you remember your quadratic equation, you join your points with the curve. And that's exactly what you have here. It's price against time. But to enable us to understand this thing properly, a Japanese man many years ago came up with this representation, and that's why we call it the Japanese candlestick. Now we're going to TradingView to better help us understand the candlestick. If you look at the candlestick forming right now, this candlestick is a bullish candlestick. So I'm coming, just a minute, please. My internet seems to be slow. All right. Yeah, so let's move on. So you can see that what you have here is a bullish candlestick. This is a bearish candlestick. A bullish candlestick means price is going up. And this is very simple. If you say something is going up, it means it started where? Below. It's as simple as that. It means it started below. It's as simple as that, right? And when you say something is a bearish candlestick, it means it's actually started above. And every candlestick has 4 general parts. And I will explain them, but before then, I want us to establish one of the rules of candlesticks. And here it is. Look at the right of my screen. I want to circle one part there. I want you to watch it. Watch this part. Can you see a countdown? Something is counting down there. Right? You won't see it on your MT4, but it's here. Something is counting down there. Right? It's counting down to 0. I want us to hold still and see what happens when it hits 0 and another one starts. When it hits 0 and another one starts, my network is a bit slow. What you're supposed to see is that another candle will start. Let me go to MT4 and see if it's going to be better. So you can see another candle actually started, right? And the time is counting down again. But my network is a bit slow, so it's coming a bit late, right? So when you see a candle that has a lifespan of 1 minute, like in this case, you say you are in a 1 minute time frame. You're in a 1 minute time frame, right? It simply means everything that happens, this candlestick will have a lifespan of 1 minute, after which it expires and another candle opens. So this candle has expired, 1 minute is up, another candle is supposed to start just beside it. But again, the network is slow, right? So that's what the time frame is. So if I say 1 minute time frame, I'm saying that go to your chart on a place where every candle you can see started and closed within a minute. So let's come back to MT4 here. If I come back to MT4 here, and I go to a 1 minute time frame on the same AUD USD, this is MT4. It doesn't have the countdown timer, but you can basically look at it and let's wait and see what happens. See, this candle seems to be bullish. Let's wait and see what happens when the lifespan of 1 minute expires. Boom, it has expired and another candle came up. You see that? Another candle came up. Look at the time inside that small box. You see the time there. The time is 22:42. 22:42, right? 22:42. That is the time. Let's see what happens when it goes to 22:43. What happens to the next? What happens next? Right? You can also look at the time on my PC down here. Right? Let's see what happens again. Now, once it's 22:43, a new candle should appear. And in fact, it has appeared, but you are not seeing it yet. It's still looking like a line. It's there. You can see the cursor has gone there. You see that? It's pushing up. That's a new candle. A new candle pushing up. Right? Okay, so what we've basically done so far is I've shown you that each of these candlesticks has a lifespan, right? So on your MT4, you traditionally have 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, daily, weekly, monthly. So on a 15 minutes time frame, it means it will take 15 minutes. Let me go to 15 minutes time frame here. It means it will take 15 minutes for this candle to close. In fact, as it is now, this candle has been on for like 14 minutes plus, right? So we're going to wait until this counts down to 0, and you see a new candle coming up, and the lifespan of that one will now be 15 minutes. All right, so let's watch. I want you to experience it. It sticks longer in your head and your mind. Boom, another candle started. And you can see the countdown. The countdown is starting from 15 again, and it's going down to 0. Same thing if I go to 1 hour time frame. is going to be the same thing. This one has 14 seconds, 14 minutes left for 1 hour to expire, right? And every candle here lasted 1 hour, irrespective of the size. So this small candle here took 1 hour. This large candle here took 1 hour too, right? So the size doesn't really matter. What matters is the time frame. All right, I mentioned that every candle has 4 parts, right? And let's discuss them briefly. So you see, this candle here is a bullish candle. If it's a bullish candle, it means it started from under. So this thick part is called the body of the candle. The thick part is called the body of the candle. You'll notice that the candle also has those are called the wicks. Sometimes they are called the tail. And some books even call them the shadow. Right? Whichever one you choose to call them, no problem. Wicks, tail, shadow. All the same thing. I call them wicks because when you buy candlesticks, we call that white rope dangling on top of it, we call it wicks. So it makes it easy. Right, so for a bullish candle, it means it started here. This is your open. Then it came back and closed here. But sometime within the lifespan of this candle, buyers pushed it all the way to this place, and this became the high. But sellers, this is closed. This open. But sellers came and pushed it all the way back, and it closed here. Also, when this candle opened here, sellers pushed it all the way down to this place called the low, before buyers came back and pushed it all the way up, then sellers pushed it down. We're going to do an example right now with a 1 minute candle, so you see exactly what I'm saying. Let me go to, all right, so you see this candle started as a bearish candle, right? Can you see buyers came and pushed it up? You see sellers have pushed it back down again, right? Presently, sellers and buyers are at par. Sellers and who is going to win this battle? Oh, buyers came and pushed it up. Buyers seem to be winning for now. Sellers are pushing it down a little. Who's going to win? Oh, buyers won that candle, but sellers came in right immediately to push down. Sellers are in control of the next candle now. There are more sellers in the market now pushing it down. I hope you're enjoying the story. Sellers are still pushing. Oh, more sellers came in to push it down even further. Where are the buyers? Notice that the sellers pushed it all the way down and the whole thing is looking thick. But if buyers come and push it up a little, you can see it will show a wick. You see that wick now showing, telling you that at a point in time, oh, buyers came and pushed it back all the way up. The thing changed from black to white again, right? You see, sellers pushed it down, buyers pushed it up. sellers pushed it. You see, buyers pushed it up. It was full body. When sellers came and pushed it back, now it has turned black again. It's white again. Right? So we have developed our second rule. The second rule is this. Second rule. Don't trust a candle until it closes. Right? Because at one point in time, you would have told me this is either a white candle or a black candle, and it kept pushing up and down. You don't trust a candle until it closes. You cannot say the exact color of a candle until it closes, just like you can't say a game is over until the final whistle is blown. Right? So, with this, I've been able to explain the basic anatomy of a candlestick. We're going to go into a book now, and I'm going to make this book available to you guys most likely by tomorrow or next. But for today, we'll be reading through this book, and I'll use that to explain some of the things I've said, and then we'll dig further into them. Remember what we're trying to do. We'll now know what an uptrend is, a downtrend is. We also know what a consolidation is. But what makes up that downtrend? What makes up the uptrend? What makes up the consolidation? That is what we're trying to decipher. And hopefully we'll be able to do that today before we end the class. So here we are, ladies and gentlemen. This book is called the Candlestick Trading Bible. It was invented by this man, Munehisha Homa. He happens to be a Japanese, and he is counted to be the most successful trader in history. He's a Japanese by descent, and which is why those candlesticks are called Japanese candlesticks, right? Even though I'll be sending this book to you, it's quite voluminous, about 168 pages. I'm going to advise that you don't bog yourself trying to understand everything in the book, because you will just read yourself into confusion. It's more or less like a primary school student who basically understands 1 + 1 and then decides to go and carry K.A. Stroud for the mathematics. He might read through, but he'll get lost and get confused, and sometimes it's difficult to get them out of the confusion. So I'm going to direct you exactly to where to go to, and I'll suggest you sit with those area for another 6 months or thereabout. Then you would have developed enough muscle to be able to chew the other things if need be. Right? So the man, we've spoken about the candlestick anatomy. Then we'll now go into candlestick patterns. Right? So what I want to discuss today is candlestick pattern. We've discussed candlestick anatomy. We'll do a review. And of course, we've also discussed the market structure, which we did last Friday, up and down, right? So the history of candlesticks, well, if you want to read it all the way up to 1654, blah, 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 17th century, nobody gives us money for doing that. We read that in university and came out, people were begging to apply. So here is a summary of what we did, right? So for a bullish candle, it's going to open from underneath, right? And it will push up and close above. The highest point buyers took it to is called the high. The lowest point sellers took it to is called the low. High and low are always the same thing. Same thing for a bearish candle. The high is going to be above, the low is beneath. Same thing, guys. The only difference between a bullish and a bearish candle is that for a bearish candle, it opens above and falls down to close beneath. It's very simple. This should not confuse anybody. If you say something is going up, it means it started from under. And if you say something is coming down, it means it started from above. So far, so good. If you understand what I'm saying, please put a 3 in the chat box. So far, so good. If you understand what I've explained so far, put a 3 in the chat box, please. Thank you. You understand me so far? I'm not just babbling to myself. Put a 3 in the chat box. Right. I'm trying to ensure that those of you that say, what nonsense is this? Will I be able to understand it? You just suddenly discover that there's nothing difficult about understanding those things. Right. Very good. So let's move on. Let's go deeper a little. Now, remember what we're trying to do. What we're trying to do is that we don't know, like presently you're in your room now or in transit. If you have your MT4 with you and you have a live account, I don't know if you want to press a buy or a sell. And even if you were to press a buy or sell, I don't know what lot size you're going to use. And I don't know the pair you want to trade. So how will I be able to trade against you so that I can win you? Remember, in this business, money is neither created nor destroyed. If you have a profit in your account and you are happy, right? If you have profit in your account and you are happy, very, very happy at that, it's simply because somebody else made a loss, right? Somebody else somewhere has a sad face. So funds move from one person's MT4 into another person's MT4. That's exactly what this thing is all about, right? Just like matter, we say it's not created nor destroyed. So we're trying to understand how can we interpret, based using candlestick, what everybody is doing, and then forecast what we think they could do next. And we don't have to be correct all of the time. Again, I'm going to use football here. The Gunners were called one time the Invincibles. And that was because they won virtually all the match. Well, they didn't win. They went unbeaten for a whole season, right? But they didn't win all the match. In fact, you don't need to win all the matches. Just like the best graduating student in a class does not necessarily have to be the best student in every subject. You just have to be best in as many subjects as possible, more than the next person who is the second best. Then you become the best in the class. What we're doing is trying to understand what people are doing. Then we'll put the edge. Remember that casino? We'll tilt the edge in our favor. When I trade, I don't expect to win everything. And that's simply because I could be winning and one big man will just enter one bank somewhere and say, look, it's time to pay my staff salary. I own Toyota. Many of my staffs are somewhere in Gambia and I want to pay their money in dollars. And all of a sudden, I was winning before, but the guy now wants to buy dollars, and the price will just drop. Why? Because his demand is so high in the market that is putting pressure on dollars, and the thing will drop. I was in profit, but now the thing will come back to my entry or even hit my stop loss. How will I know that this mogul is going to come up to make a demand? I won't know. So I'm not aiming to win every trade. I'm aiming to win as much as will make me profitable. And I told us how the casinos and all these betting organizations work. They aim to be right 51% of the time, right? They will win 51% of the time, and they will lose 49% of the time. They don't care if 10 people win back to back to back. They know it has been skewed in their favor. So you and I too, when I trade, for instance, I'm going to show you some of the strategies, some of the money management. I know Mr. Shilabon taught you guys money management, but I'm going to go practical with you guys. Some of the money management that will ensure you will remain consistently profitable and you don't lose your money. For instance, one of the strategies I use is that I use what we call the risk to reward ratio of 1:2, meaning that if I am risking $1, it should be because I'm attempting to make $2, right? So if I'm risking $10, it should be because I am risking it for a possibility. It's a possibility, not a certainty. A possibility of making $20. So let's say I take 5 trades. The first one, I lost. That's minus $10. I take a second trade, and I lost. Minus $10 again. I take the third trade, and I won. Plus $20. I take the fourth trade, and I lost. Minus $10. I take the fifth trade, and I won. Plus 20. Ladies and gentlemen, I lost 3 times out of 5. If you want to find the percentage, that will be that I lost 60% of the time. But did I end up making money or not? Put in the chat box how much profit I made eventually. I want you to type in the chat box. How much profit did I make eventually? Yeah, Madam Joy and Mr. Dari. $10. $10. But I lost 60% of the time. I lost 60% of the time, but I still made money. So you can see why this is different from gambling, right? Because in the gambling, the house have to win 51% of the time for them to guarantee their success. In trading, we don't have to win majority of the time. We just need to find a way of forcing the market to make us to win by using certain terms, certain tricks. And those are tricks we're trying to explain to you guys. Right? So we're not saying that when you do what we're going to teach you here, you will never lose. We're saying that by the time you aggregate everything you've done over a series of trades, usually about 25 samples, you should come out tops at the end of 25 trading samples. Right? But again, let's leave that till Thursday when I break that a little bit deeper. So now we're going to talk about how can we know what everybody is doing and now forecast what will happen. We will not be right all of the time, but if we do this enough, we will end up making money. Right, so the first one we're going to talk about is called okay, in this book, they showed this upper part, they call it shadow. They also mention tails. We call them wicks. They are all the same thing. Remember, I mentioned that. The first candlestick pattern we'll be discussing is called the engulfing candlestick pattern. The engulfing candlestick pattern. The word engulf, widely used when fire consumes a house. They say the house was engulfed in flame. When you say something is engulfing, you mean that it's bigger, it consumes something else. So let's say we have a small candle like this, and they will have a large candle like this, right? This large candle engulfs this small candle because you can practically lift this small candle and place it inside this big candle and it will swallow it, right? So the big candle is the engulfing candle. So the first one is a bearish engulfing. You can see that this small candle can practically fit into this bigger candle, right? And because the bigger candle to the right, remember candlestick prints from the left to the right. Candlesticks, they print from left to the right, right? Now, because the candlestick to the right, which is the bigger one, which is the latest candle, this is the former candle, this is the latest candle. Since the latest candle is a down candle, right, is a bearish candle, we say that this is a bearish engulfing candlestick pattern. We'll call this a bearish engulfing candlestick pattern, simply because this bigger candle is bearish and is engulfing the smaller candle. I believe this is very straightforward, right? Now, a bearish engulfing candle tells you that sellers are in control. When you see a bearish engulfing candle, it simply tells you that sellers are in control. That's what it means. Sellers are in control. And how do we trade a bearish engulfing candle? When sellers are in control, you can enter your trade to sell two ways. Number one, at the end of the bearish engulfing candle, you can enter your trade to sell. But if this bearish engulfing candle is too large, you can wait for price to come back to the body of this candle. Here, the body of the candle that was engulfed. You are waiting for price to come back to it, tap you, and you now sell from there. So there are two ways to sell off a bearish engulfing candle. But one thing you must note is that an engulfing candle is an action candle. An engulfing candle is an action candle. It means take action now. That is the meaning of an engulfing candle, right? It means sellers are in the market if it is bearish. Of course, there's also a bullish engulfing candle, right? It's also telling you that buyers are in the market, right? Pretty straightforward. When you find you see, this is an uptrend. Here we have an uptrend. Price is moving. Then all of a sudden, boom, you see a bearish engulfing candle. What does it tell you? It means, oh boy, all these buyers here, they've met some sellers that are willing to sell, right? They've met, by the way, some of these buyers may be the ones that became sellers. Like you bought something at 1 naira, price has gone to 5 naira, you feel, okay, I've gotten enough profit, let me sell at that point, right? It doesn't mean that it's fresh people coming. It could be fresh, it could be the same set of people. You see, but when you see a bearish engulfing, it tells you that sellers have come in. So what will you be planning to do then? You are planning to sell at this level, which is the body of this candle that was, or immediately at the bottom here, you just sell. Like this case now, if you sell immediately at the bottom, boom, you see, you're in profit already, right? Same thing for a bullish engulfing. If you have a bullish engulfing, it's a sign to buy, right? It's a sign to buy. Okay, so let's move on to the next candlestick pattern. The next candlestick pattern is called a doji. It's called a doji, and a doji looks something like this. If you notice in a doji, you don't find any body. The body is more or less like the open and close are together, right? This is an indecision candle. It means there is a stalemate between buyers and sellers. Nobody's actually winning in this battle, right? Nobody's winning. So if nobody is winning, what trading decision should you and I take? Put your answer in the chat box. If nobody is winning, what trading decision should we take? Buy, sell? Put your answer in the chat box. Nobody is winning. What trading action should you and I take? Buy or sell? If nobody is winning, maybe the money you have to invest in this thing is just $10,000 alone. This market is $7.3 trillion. If you don't understand that figure, you only see it when snake eats it in Nigeria. Well, let me explain the figure to you very well. Let me explain that figure to you very well. There are approximately 80. How many people do they say is in Nigeria? One something million, Abi. What's that our population again? Let's say we are 200 million people in Nigeria.
100 million.
Let's say we are 200 million people in Nigeria. If all of us trade this Forex market in one day, all of us trade this Forex market in one day, and we all make $100. $100 is big money. It's bigger than the minimum wage. If all of us make $100 in a day, we would have made $20 billion in a day. If you approximate this $20 billion in a day, every one of us in Nigeria, including your grandmother, grandfather, everybody, will make 20 billion. If we approximate this 20 billion to trillion, it will be 0.2 trillion. The Forex market is around $7.8 trillion. If you remove 0.2 trillion from it, that will be 7.6 trillion. The market will not even know that we came. The market will not know that we came. So if you, with your tertiary $500, your body is shaking, something is telling you, buy, 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 buy. Just tell the thing, get thee behind me, Satan. I don't want to donate my money to somebody else's account. If you enter the buy and the market has not made a decision, you may be lucky. When you are buying, maybe buyers now won, but it is not sustainable. That is gambling. In Rich Vision, we teach you to wait, and we have our rule number 3. How many of us remember the rule number 1? I gave rule number 1 last week. Can anybody remember rule number 1? Anybody put the answer in the chat box. We gave rule number 1 last week. Anybody, or if you can unmute yourself and talk. I remember I gave a rule last week, rule number 1.
Hello, sir.
Yeah, please go ahead, sir.
Yeah. The trend is our friend. The trend is your friend.
The trend is your friend is rule number 1. Rule number 2, I gave rule number 2 today. Any other person, another person, unmute again, another person, unmute again. Rule
Don't trust the
number 2.
candle until it closes.
Thank you very much, sir.
Don't trust the candle until it closes.
Until it closes. Don't trust a candle until it closes. Rule number 3. Rule number 3 is here. Rule number 3 is this. We are paid to wait. In this market, the market has been structured in such a way that it gradually but surely takes money from the impatient and puts it into the pocket of the patient. It takes money from the impatient and puts it into the bucket of the patient. That is what this market does. So we are paid to wait. You see, in this market, there are countries, big countries, big banks. They are fighting each other. Every bank wants to win. It's like in Nigeria, Zenith wants to win First Bank, Access Bank wants to win GTB. Everybody, they are fighting. God now gave you one small, I don't know what to call it. Those who they collect ajo. Your own ajo is, I will soon make it microfinance bank. And you are now going to fight with GTB, which I will soon make it microfinance bank. You know you are biting more than what you can chew. You wait. I will give a story and we'll continue. When I was much younger, there was a particular children program they normally show around 5 minutes past 4. And we'll all come back after having a siesta watch from schools. We'll have to sit down and watch it. And it's called Sesame Street. There's a particular clip from Sesame Street that stuck to my head. There were 3 dogs, small, big, biggest. And there were 3 bones. Small, big, biggest. And when they released the dogs, the big and the biggest ran to this one and they were dragging it. The small simply came and took the big and walked away. Eventually, one of these 2 lost, and that person had to make do with the smallest one. It's talked to me for over 40 years now. Now, when it comes to this business, the market does not know that you exist. You see, if not for Rich Vision, in fact, some of you, even though as I'm talking now, you are seeing the picture of you are seeing my picture. If you meet me on the road, you won't know me. If I meet you on the road, I will house. If you lose, your money will be coming to my account, and both of us will be greeting each other as Rich Vision friends. That is how this business is, right? So there are big banks fighting. You and I, we will not get involved until a winner has been declared. You saw that 1 minute, candle I was showing you. It was black, then it became white, then it became black, then it became white. We are not getting involved. We won't get involved. When the battle has been lost and won, we will now jump on the cow like leke and cattle and do our parasitic symbiotic relationship and move on. We are not interested in a tug of war to go and pick sides. We don't care. If Chelsea win, I wear blue cloth. If Arsenal win, I wear red cloth. Now who win? I'm my friend. That is what we are doing in this business. I have tried to learn how to predict what the market will do, and I've failed miserably. And I know that even though I'm saying it here, many of you will disregard this advice, and you go burn your fingers before coming back. Nobody under the sun can tell you what 10 million people will do. Nobody. I miss Donald Trump because Donald Trump's favorite means of communication was Twitter. When Donald Trump tweets, the market reacts. If he just sends the tweet, US dollar can become strong or weak. It will just turn the market upside down. All your analysis will just scatter. It will become nonsense, or it will hasten you to hit TP. All of a sudden, you discover that one man has the power to make you hit stop loss or take profit, not the analysis that you did, right? So when we discussed engulfing candles, I told you that it means buyers are in control. They have won. This was the last down candle. Buyers came and pushed it. Buyers have won. That is why we are interested in buying. If it was a bearish engulfing, sellers have won. That is why we're interested in selling. When no winner, we put our money in our account and we wait. But what are we going to wait forever? No. How do we trade and engulf a doji? We box out the doji. We'll box it out. We'll box it out like this. Box it from the top of the wick to the bottom of the wick. And we wait to see what price will do. Remember, we don't just trade any doji on the screen. We must have been trading something. So like when we had an uptrend, we had something like an uptrend like this, price is going up, price is coming down, price now came here. We're expecting price to make a U-turn from here. Then inside this place, we now saw a doji. right? So we'll box the doji. We will box it up like this. We'll box it. We'll now be waiting because sellers are still selling. Buyers are pushing. Two of them are in the middle now. We don't know what's going to happen. And we are interested in trading in line with the trend, which is buy. So we'll wait. Once we finally see one candle closing, not a candle peeping outside, because a candle can go outside and come back and close inside. And what you just see outside will just be a tail. You want a candle to start. So if it's a 1 hour candle, you wait for that full 1 hour. It will close. It will close above. You say, hey, finally, after this battle, the buyers have won. Now I am ready to buy. You will now buy with them. There is no shame in saying that I don't know what will happen. When it has started, let me follow them. There is no shame in doing that in this market. So you see, this is an example. The market was pushing up, pushing up, pushing up. Maybe this is a downtrend. This must have been something like a downtrend like this. So this place here is this. Then you now saw this doji. You are watching. Could they still go up? You see, let me show you something. This is a downtrend, right? This thing can still go up like this before it drop. Or it can go up like this, then drop. Or it can go like this, then drop. Or it can go like this, and you don't know how far it will go, or how shallow it will be. You don't know. So the buyers can continue to push until they get to this line, then they will start selling. You don't know what they will do. And you are not paid to determine what 10 million people will do. You are learning from Rich Vision now that allow the gullible ones to do that. You wait for the market to tell us what you want to do first, then you follow. So what do? You box this thing from top to bottom. You box it and wait. You see this candle came and closed outside this box. Once it closes outside the box, you enter your cell and move because the direction has now been made. A direction has now been known. Ladies and gentlemen, am I making sense to you guys? Let me know if I'm making sense. Yes, you are making sense. No, I am lost. Put your answer in the chat box, please. Am I making sense? Thank you so much. We are not in a hurry to make this money. We know that with this skill, this money, we'll make it. Right? God keeping us alive. But we'll wait. Let all the big guys fight. Right? Don't bother about this dragon doji. Just forget about it. A doji is a doji. Whether it is dragon, whether it is Python, you see, it's still the same thing. A doji is just that nobody. That's just the meaning. The one that there is nobody that is up, they call it a dragonfly doji. Who cares whether a snake in the monkey shadow or whatever? Just leave them. Same thing with gravestone doji. It's just the opposite of dragon. We are not bothered about that. Leave it, let it go. Again, but you can see the rule. The rule is the same thing. Once you see a doji, look at this one. Once you see a doji, you box it, price close beneath it here. You see? This is the one that closed beneath it. Now, very good example. Don't be in a hurry. You see, when you box this thing, you box it like this. Let me box it. Let me box it so that we'll see. We'll box it like this. Wait until price closes. Can you see that this candle did not close? There was a time it came down, but it went back and closed inside. It means there are still some buyers. There were still some buyers struggling. If you are jumped in, it's very possible that the buyers could have pushed this thing up. Boom, and you lose money. You wait. Let the sellers come and close beneath this place. Once they close, you know that you now have a 51% probability that they will sell. Not 100%, not even a 60%, a 51% probability. You're not behaving like a casino. You can now move and sell. Right? You are waiting. It's a waiting game, ladies and gentlemen. Waiting game. Let's forget about the morning star and the evening star, all those ones. Let's leave them, please. When I say leave them, leave them. When I say leave them, leave them. I've taught over 10,000 people. I'm talking from that experience now. Right, the next candlestick pattern we've discussed engulfing, and engulfing is divided into two: bullish engulfing, bearish engulfing. We've also discussed the doji, and now we're discussing the pin bar, or it's called the hammer. And of course, you can see it looks like a hammer. The difference between a doji and a hammer is that the doji has a body, and the hammer has a body, sorry, or it's also called the pin bar. It's the same name. Then it has a very long tail. And it's not a must that it can also have a tail above. For example, like this. A hammer can also look like this. You see that? It has a small tail above. Characteristics of a hammer. This long tail here should be at least 2 or 3 times the size of the body of the candle, and 2 or 3 times the size of the other smaller tail or wick, right? Then you say this is a hammer, right? Like this is a hammer here. This is a hammer. Right? This is a hammer. This is like a doji. This one is a hammer. This one here is a hammer too. You see that? Right? But usually I want hammers with smaller bodies, like the small body. Now, the color of the candlestick does not matter. The color of the candlestick does not matter. When we talk about hammers or pin bars, we are looking at the long shadow. If the long shadow is beneath, it means it's a sign of bullishness. It means there are some buyers that, like ninjas, they went to hide here. They were waiting. Immediately sellers just came there, boom, they manifested and started buying. So it shows that there are buyers sitting here. So it's called a bullish pin bar. When the long wick is under, it's called a bullish pin bar. When the long wick is above, it's called a bearish pin bar, irrespective of the color of the candle. Again, I didn't state this in this class. I have to state this here. When you see a candle that is going up, it's either called a long candle, or it's called a bull candle, or it's called a buy candle. When you see a candle printing to the downwards, like this black candle, it's called a short candle. I can say I'm going short, it means I'm selling. Or it's called a bear candle. And you can also call it a sell candle, right? Just so you can remember, in case you hear me using the words interchangeably. Again, how do you trade a pin bar? You trade a pin bar the same way you trade a doji. You box it up from week to week and wait for price to close above. Once price closes above, you enter and buy. Stephanie, very simple. Right, so we've discussed 3 candlestick patterns, and they are different. The pin bar is divided into 2. There's the bullish pin bar and the bearish pin bar. The bearish pin bar has another nickname. They call it the shooting stars of Ibadan. Just leave that. Call them pin bar, bearish pin bar, bullish pin bar. They also have the now we're going to discuss the last candlestick pattern. It's called the harami pattern, but I prefer to call it the inside bar. The inside bar is a pregnant woman, right? So just imagine that what you have here is a pregnant woman, big stomach, legs, right? You see, for an engulfing candle, the big candle was at the right and the smaller candle was at the left. For an inside bar, the big candle is by the left, the smaller candle is by the right. That's just the difference. It's actually an engulfing candle, but the reverse. The big candle is by the right, is by the left rather, and the smaller candle is by the right. This is called an inside bar because this one is inside this. Whereas when engulfing, is the other way around. I hope you are not confused. Of course, if you watch the video again, you'll grab it. Right? So this is an inside bar. This is the mother bar, and this is the smaller body. The mother bar is the big one, the smaller body. This is an inside bar. So when you have the bear candle, right, it's called a bearish inside bar, right? And this is a bullish inside bar because the bullish candle is by the one by the right And this is the bearish candle, is one by the right, by the left is called a bearish inside bar. How do we use a bearish inside bar? So when you have an harami candle, it tells us the market is in an indecision period. You see, I've told you 3 candlestick patterns that shows indecision. A doji is an indecision, a pin bar is an indecision, an inside bar is also an indecision. So you can see there's a lot of waiting. So here you see an harami candlestick pattern or an inside bar. When you find an inside bar, what do? You mark up that biggest candle. That biggest candle, you mark it up from week to week. And you wait for price to do what? Close beneath. When price close beneath, you enter and you sell. The same way you trade, look at this one, bullish harami, right? Again, you mark it up from top to top. See how all these other candles did not close above? Once this one closes above, you are ready to buy. Boom, you enter and you buy. All this time here, they'll be accumulating orders. People who want to force the market to buy will enter. People who want to force the market to sell will enter. And remember, some set of people will lose. But you here are learning how you will not lose, right? I think I'll stop here. Okay, let me just explain one more. And we'll have to stop and do some exercises before we call it a wrap. The last one I'll discuss is called a tweezer, right? I love calling it railroad. Railroad. You know, if you go to a railroad track, you see horizontal metallic rods, then you now see some vertical rods in between, right? Then some gravel. These rods in between are usually almost the same height. So we'll call them a railroad or a tweezer. So when you see a tweezer, it will be a bullish candle, bearish candle, or bearish candle, bullish candle. It's also a sign of indecision. When you see a tweezer, you treat it the same way you treat a harami, you treat inside bar. You just box it up from week to week and wait for price to close above. Once price closes above one of them, and both of them, you enter and you buy, right? So we've been able to discuss 5 candlestick patterns. We're going to name them now. Number 1, we said an engulfing candle. An engulfing candle, we say, is an action candle. Then we have number 2. We said we have a doji. It's an indecision candle. Number 3, we have a pin bar. A pin bar is an indecision candle too. And it's a modification of a doji. Number 4, we said we have an inside bar, which is the opposite of an engulfing, but it's also an indecision candle. And the 5th one, we said we have a railroad, which is also an indecision candle. You see that? So for these 4, we have to wait for something to happen. For this, we take action instantly. Right? So let's do an exercise before quality wrap. So here we are. You're going to name these candles. Everybody pick your keypad. No phone a friend. No 50-50. Every answer you give is your final answer. What candlestick pattern is number 1? Put your answer in the chat box. What candlestick pattern is number 1? What candlestick pattern is number 1? Put your answer in the chat box. I didn't teach you mother candle. Mother candle is not part of the 5 candlestick patterns. What candlestick pattern is number 1? Yes. The candlestick pattern in number 1 is an inside bar. It's an inside bar, right? A big candle with a small candle is an inside bar. In fact, it's a bullish inside bar. It's a bullish inside bar, right? It's not an engulfing. An engulfing, the bigger candle has to be to the right. In an engulfing, the bigger candle has to be to the right. What candlestick do you call candlestick number 2? Put your answer in the chat box. Candlestick number 2, what candlestick pattern will you call that? What candlestick pattern will you call number 2? Somebody say road. There's no, I didn't teach you candlestick pattern road. Oh. Yes, it is a railroad. A railroad, a tweezer is a railroad or a tweezer, yes. That is the candlestick pattern number 2. What candlestick patterns are number 4 and 5? What candlestick patterns are number 4 and 5? What candlestick patterns are number 4 and 5? What type of engulfing? If you are saying engulfing, you have to tell me what type of engulfing. If you are saying engulfing, you have to tell me what type of engulfing. Exactly, is a bullish engulfing. Is a bullish engulfing. Is a bullish engulfing. All right, last question on this batch. What candlestick pattern do you call number 7? What candlestick pattern do you call number 7? What candlestick pattern do you call number 7? And I want the complete name. What candlestick pattern do you call number 7? What candlestick pattern do you call number 7? A bearish inside bar. A bearish inside bar. A bearish inside bar. Right? So number 1, a bullish engulfing. Number 2, number 4, a bullish engulfing. Number 3, which is this candle here, the pin bar. Right? Okay. So we have wrapped up the individual candlesticks. So you and I have moved a little bit closer to demystifying the whole of this chart. Now we understand by looking at this place that we are in a range. We understand simply by looking at this that we are in a range. Our price is bouncing, 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 bouncing. But if I want to sell, I want to see something to support my sell. I won't just sell simply because I drew a line on my chart The remaining people in the world did not know that Mr. Jafar drew a line on his chart. Arsenal is playing Chelsea. Joy is the technical advisor for Arsenal. Nobody knew that Joy drew something on a sheet of paper. It doesn't concern anybody in the field, right? So Mr. Dario wants to take a sell. He has heard that Bishop said, when you have two touches to a point, it's an indication that that place might be a resistance. So he saw one touch, two touches. Woo! He saw one touch, two touches. Now he's thinking, I have a resistance and I have a support. I'm going to buy when price comes there. I'm going to sell when price comes there. But we would be unwise. We will not be good students of rich vision and obviously not have learned from Bishop Raj if we simply just sell because price has approached that place. We will wait for some signs that sellers have actually taken control. And once we see those signs, we will engage. So we have one touch, two touch, and price is here. When price came back into that zone, remember I told you how to draw your zone before. So you see this candle and this one. This is a bearish inside bar. So what will you do? You box the largest one, box it up, right? When price closes beneath, you are ready to sell. And you will sell from here down to this place for, 35 pips. You make your profit, you take a walk. Price touched 1, 2. It's coming back for the third time. You see this price that went all the way down to touch it, right? This looked like a bullish engulfing or a tweezer, whichever one you want to call. You box it up. What do you see? Price closed above. Price came back to test, came back again inside. You enter and you buy. Boom, you are going, right? Price came back here again. A touch. What candlestick can you see there? A harami, right? You box it up. You are waiting for price to close beneath. Price closed beneath, price came again, you engage in a sell, right? You really didn't go too far before price went. You don't want to jump in. Look at this. If you drag this thing further, if you had entered here just because price have approached, you just enter, boom, the thing kept going and it hit your stop loss, you'd have lost money. You want to wait. Because price is approaching this area does not mean that you necessarily sell. There might be plenty buyers. There might be one big bank that is supporting this buy. You want to wait to see that the people that are buying are actually tired and the sellers have come in before you go in. When you do this, you will trade with the rest of mind. How many of us here have been trading before? If you've been trading before, please say so in the chat box. Say yes in the chat box. You've been trading before you came to this class. You had small experience of trading. Please say yes in the chat box. You've had small experience of trading. Uh-oh, are we all new? Are we all new in this class? Oh, I don't like that. I usually love it to have when we have one person who has traded before. Oh, anyway, you guys are fortunate. If I learned this thing when I started trading, I would have gone far, far further. I wish you had some people who have traded before. They will tell you that they've traded for like 5 years. Nobody has told them this thing I'm telling you? Nobody. We've not discussed one indicator since, right? I've been breaking it down so that you can understand each of these things that is happening. If you are just, when I say if you've been trading for, I'm talking about like 1 year or 6 months experience. If you are 1 month, there's no difference between you and somebody that they just delivered from cesarean operation now. All of you are newborn baby, whether by natural birth or cesarean operation. Right? So that's what we're talking about. That's what we're talking about. That now, what have we done? We have made you see. Look at this thing. Look at this. Let me show you what we just did. Let me show what we just did now, so that you can understand. Right? This is what we just did now. All right. So watch this. You know you're in a downtrend, and the trend is your what? Your friend. You always want to sell when you're in a downtrend. So how will you sell? Price came down. Price came down. Price is going up. If you remember what I told you, I said when you are thinking of buying, when you are thinking of selling, the last up candle for a sell. When you are trying to sell, you are looking at the buyers. You want to be sure that the buyers have been violated. When you want to buy, you are looking at the sellers. You want to be sure that the sellers have been violated. The last up candle is the one you are focusing on. You see that last up candle? You put another line underneath. This is the last up candle. Put another line there. Right? You see that now. Once price came into that place here, what candlestick pattern do you see? Right? So this is your like first touch, second touch. It has established as a downtrend. When price came back into that place, there are 2 candlestick patterns you could have seen. Number 1, you could have seen a pin bar. And when you see a pin bar, what did I say you should do? You box it up from top to bottom. This candle closed beneath it, you are selling. If you don't want to see a pin bar, you can see a bearish engulfing. And when you see a bearish engulfing, what did I say you should do? Is an act now candle. A bearish engulfing is an act now candle. Once you see a bearish engulfing, you enter immediately and sell, or you wait for price to come back to the body of that candle. That's what I explained. You see? And then you sell. In this drop here, just from here to here, is 111 pips. That's about $11. That's about $111. That's about $1,115 that can be made. Ladies and gentlemen, I'm still not happy that there's no old person in your class. Usually there should be an old person so that you'll be guiding you after the end of this class. But can you guys just see what I did now? So we've been able to look at it from uptrend, downtrend, and now we are thinking of how can we use that. Remember, there are many people getting involved, so we will wait. Notice, see this one again. Boom, it tapped there. What candlestick pattern can you see? A harami, right? Large blue candle, small red candle. What do? You box it up according to what I said. You box it up. One, you see, many sellers, buyers. Once sellers overtake it like this, boom, you enter and you sell. You enter and you sell. Whoosh! See profit. See profit. Look at this one again. Look at this one. I love this one. Look at this. When they came here, what is the candlestick pattern I can see? Who is ready to? Who wants to talk with me? Who wants to unmute and talk with me? We have only like 5-10 minutes to finish. Who is in a quiet place and you want to unmute yourself and talk to me? Who is in a quiet place here? Anybody? And never mind, by the time we go tomorrow again, we'll break it, simplify it further and further and further until it becomes very simple. You can do this thing on your phone. But I have to explain the nitty-gritty to you so you grabs it. It's going to get easier by tomorrow. I want to talk with somebody audio. Anybody here, please?
Yama Chibozo.
All right, Chibuzo, thank you. You see this blue candle? You can see that I touched that line. Let me scroll. You see this candle? It touched our zone. Would we have sold from here? Would we have sold from here?
From that blue candle.
Yeah. Will you be thinking of selling from here?
No.
No. You remember what candlestick pattern can you see here? We can see a bullish engulfing. Can you see a bullish engulfing? Yeah.
Yes. Yes.
And we don't sell on a bullish engulfing. We sell on a bearish engulfing. So when you see a bullish engulfing, it's not a sell. It's not a sell signal. It's not a signal to sell. It's a signal to buy. Engulfing candles are buy now candles. It's a signal to buy. So we're not going to enter yet. You see that? This again is another bullish engulfing. We are not entering. We are not entering. Finally, we see this one. What candlestick pattern is this? It's like a doji. It's like a doji, or you can even call it a pin bar. Then we'll put our candlestick pattern, our box there. You see, this one closed beneath it. Once it closed beneath it, what do? We enter and we fire down. Straight, pips. We've made pips. We sell it instantly. And that is how we do this thing, guys. So ladies and gentlemen, thank you for coming to class today. I'm hoping that you guys will take to my advice. And the advice is this. Don't mind anything you hear on radio. Trading is easy, blah, blah, blah. I told you guys last week that trading is a difficult way to make easy money. It's a difficult way to make easy money, right? But there is money to be made. There is money to be made. I can't tell you the number of people who have tried calling me today and I deliberately did not pick their call because they are trying to give me money to trade for them. See, can you just take this at 10,000? Can you just take this at 100,000 and trade for us? How many can I do? There are many Forex schemes around. People put money, disappear. If you can trade, there are people willing to give you money to trade for them. And you can be taking 20%, 30%. You can make a lot of money trading. But you, and if you don't even want to bother yourself with other people because trading other people's money now, wahala, you can trade your own money and grow it gradually. I will end with something I want you to go home and think about. We'll discuss it again tomorrow. By the way, if you have your laptop, you should be planning to get the combo. I'll talk about it tomorrow morning. I want to show you just one thing, and we'll call it a wraps. This is where is that thing now? Oh, I think it's on my laptop. So I'm going to show that tomorrow. It's on my laptop. I'll try and use the laptop tomorrow as against the desktop. I'll show you guys tomorrow. Well, ladies and gentlemen, the idea is this. everything I'm saying here is what you guys are supposed to learn over a period of about 6 or 7 months. But we are trying to teach you guys within 2 weeks so that we can move on to other people. Your own part is to ensure that you listen to this thing over and over and over and over. It's like the book of the law shall not depart out of my heart, mouth, but I shall meditate upon it day and night and observe to do the things therein so that I can find good success. That's what we're saying. Some of the things I've said in this video will not make sense to you. Just like some of our parents told us something we didn't understand until we got married. Some of the things I'm saying won't make sense until you start pressing buy and sell on your own phone. Then it will make sense. But by then, you might not be able to get my audience. So this video is where you're going to go back to. Be encouraged. Tomorrow I'm going to make it much more easier and we'll all get better. Enjoy your evening and God bless you all.